We've got a crypto-friendly bank crisis on our hands, Silicon Valley Bank shuttering and Silvergate Bank liquidating. Joining me now to discuss their impact on Bitcoin is our Week in Review panel. We've got CoinDesk Editor at Large, Christie Harkin in Toronto, as well as Managing Editor of Tech and Protocols, Brad Keoun in Austin. So not so much of a happy Friday, but happy Friday. Let's get both of your thoughts on this top story of the day. So California regulators closed the 16th largest U.S. bank, Silicon Valley Bank, which did count a number of crypto entities as clients, including CoinDesk. So according to CoinDesk research, Blockchain Capital, Castle Island Ventures, Dragonfly, and Pantera all had relationships with the bank. So just first off, Brad, Christie, your reaction.
This expression you keep using, crypto-friendly banking crisis. I'm not sure it's crypto-friendly, but yeah, I mean, I think unlike with Silvergate Bank earlier in this week, which, we've had some time to report on and dig into the details there, the Silicon Valley Bank collapse is still pretty fresh. We're still sort of, picking through the rubbish there and figuring out what went wrong. But it does feel, it does seem like they had a lot of crypto clients. Maybe not as much on the lending side, on the asset side. But, David Z. Morris, our columnist, had a really smart column out earlier today about just, there's issues that you said this earlier, Christine, issues that all banks are facing, which is, coming out of the 2008 financial crisis, the regulators pushed hard for all these banks to hold more liquidity, specifically so they could get through banking runs like the ones we're seeing, over the past week, and fears of that. But then simultaneously, so all the banks loaded up on treasury bonds and government-backed mortgage securities. And then, because of the inflation situation, the Fed started jacking up interest rates, and that put all these securities underwater, and which is fine because under the bank accounting rules, you don't have to take a loss until you have to sell those securities. So it's not a problem until the depositors start taking their money back, and then you have to sell that stuff for liquidity. Yeah.
Exactly. And so that's what we're seeing, at least in the crypto industry and with Silicon Valley Bank, which is just a tech startup focused bank in the greater tech industry. Christie, your thoughts?
Well, I think that there's a question that I know that I have as somebody who's not familiar with the way that all of these banking systems work. And there's a lot of, I'm seeing lots of talk about how, well, it's important to understand that SVB needed FDIC receivership, whereas Silvergate managed to wind down without that support. Now, I understand that the FDIC provides insurance. That's the point of them. But it's only at like $250,000 per depositor. And when you're looking at some of the per insured bank and account or whatever, when you're looking at some of these companies, that's peanuts. So what is this? What's going on here? What is the role here in terms of the FDIC receivership versus winding down without that support? Why is that meaningful? Brad, maybe you can fill me in on that.
Well, I mean, this is a huge issue, Christie, which is, to your point, the FDIC insurance limit, $250,000. It's pretty low. If you're a corporate or a big institutional investor with, tens of millions or hundreds of millions of dollars of deposits. Yeah, I mean, it's nothing. But the assumption is the Fed is not going to let you lose money, But in reality, apparently, it's not clear exactly if the Fed is going to let you lose money. If you have deposits.
Well, with the fall of Silvergate, we heard from Senator Elizabeth Warren on Twitter that she was blaming the crypto industry for this. But with the fall of Silicon Valley Bank, I mean, that's more of a tech focused bank. So it's not just crypto. And so now folks are saying, this is a banking sector problem. And so they're already,
or is
there
it
are
a
folks
startup
already suggesting
problem?
that.
I mean, it might be just a startup problem, because that's what I'm reading about Silvergate not Silvergate, SVB, is that
no, because it's, I mean, with the banks, I mean, they're not, just as Brad explained, they have their loans out, and they've been trying to be conservative with buying up treasuries, T-bills, etc. But those are underwater because of interest rates going up. And so if you have a run on the bank, or you have your depositors who are in the crypto industry or in the tech industry, and they're trying to make payrolls, and they're going through contagion risks in their own industries, and they're unable to make their deposits, or that those deposits are putting pressure on the banks, and they're having to sell those securities, those T-bills, for less than what they got them for when they're underwater. Yeah, you're going to have insolvency issues. And so it's up to we'll see with these regulators to see how solvent they are after all is said and done. So some folks are suggesting maybe now is the time for the Fed to step in and do what they're supposed to do and prevent a banking crisis.